What up,
Why,
sir?
what's up, man?
What's up, guys? How are you?
Good. You made it through the
You passed the
gauntlet of
test.
tech setups. Did we get
Yeah.
that set up?
This is like one of my first times using our podcast room for something live. So I generally just jump in like a little phone booth or something like that. So yeah, it was a lot of fun. Happy to be here.
Let's go. Well, congrats on your plant. You look very. I was kind of expecting to show up with a collared shirt and a suit. I don't know. I thought you were representing the suits in crypto Twitter these days.
No, it's funny. I now have a fund within a TradFi firm, but I've never worked in TradFi. I've only worked in like fintech, TechFi. So no, we're pretty chill over here.
Dope. All right. So I mean, I think there's a bunch of places we could go with this. I think VanEck kind of came onto the scene in a very interesting way, like speaking the language, feeling very native, yet being a very, it's a traditional institution. And so I think captured a bunch of hearts and minds, I would say, from that move. But I'm curious, maybe to start off, like, how are you sort of looking at the opportunity in crypto from the seat that you sit in?
Yeah, well, I'll just say like holistically at VanEck, we have many different parts of our crypto operation. We obviously have our ETF business that operates globally, and most recently just had a new ETF launch in the US. We have a hedge fund. We have an actively managed ETF run by Matt Siegel, hedge fund run by Pranav Kanade, and then my partner Juan and I joined VanEck about a year and a half ago to launch the first venture fund. We joined from Circle. So we pretty much cover every single part of an entrepreneur's journey from the first check-in to when they can become really an institutionally traded asset. We're very excited about all things that stablecoins enable. And so from a fund perspective, we're really investing in what I'll say kind of the middleware and protocols, as well as the end distribution points that could be consumer or business related. That kind of takes, fintech on crypto rails and brings it to the masses. A lot of that is kind of building upon the thesis we had at Circle, but just taking a different view of like, where is the value ultimately going to accrue? And our view coming to VanEck was that, just having a stable coin or just operating a stablecoin enabled business is probably not enough. And at the same time, we have an abundance of cheap, high throughput blockchains. And so we thought that fintech businesses would jump on crypto rails pretty quickly. Yeah, I see like 10 of these a day now, but like now Deal is hiring for, a stablecoin team and they're building on stablecoin rails. So it's never been easier to use crypto. And obviously Genius Act and hopefully the coming Clarity Act will further, will further kind of catalyze that growth. But we have to think, okay, what's, next 3, 5, 8 years, what are the new types of businesses that are going to be built? And so we were lucky to invest in many stablecoin enabled fintech businesses at Circle. Now we have a different view. We're really looking into all things around tokenization and yield. Still looking at some aspects of payments, but there's a lot of competition, a lot of incumbents that are already moving into the space.
Where do you see some of the, I guess, maybe underappreciated opportunities within that purview? I think we see a lot of crowding in the things that are working, but I think TradFi is much bigger than people think. And if stablecoins continue on their growth path that we think they are, I think there's a lot of areas they're going to touch that people maybe aren't thinking about. So curious what that looks like.
Totally. I think credit is still a wide open space that we will be investing in and kind of all of that credit infrastructure. On that note, I think, how do you take DeFi and actually make it kind of a global API? We've yet to see that. There are some analogies here too, I think, with tokenized equities and DeFi that we can apply to stablecoins, which is like all the stablecoin issuers for years have been doing these bilateral deals with blockchains, deals with exchanges. As stablecoins grow and really proliferate, we think that DeFi is probably one of the biggest, it benefits probably the most. And in that, how do you enable a company or a fintech to just plug into DeFi and access the safest DeFi yields? Because all the other stuff has already happened, like wallet abstraction, chain abstraction. Circle recently did this with a product called Gateway, where you hold one USDC balance, but you can access it across any chain that they have. So that infrastructure is, I think, enables the next wave of like, how in my Robinhood app can I just simply access USDC yields on Aave, curated by this curator. And same thing with equities, publicly traded equities, and eventually private assets as well.
Okay, I want to get into the equities piece, but I am, I guess, curious in how you were sort of like, how do you articulate where the value capture is in this shift? You're saying it's maybe not by launching another stablecoin or stablecoin network. What are the dynamics that you think that are necessary for these new entities to actually capture the value of building on these rails?
Well, I'll give you an example. I mean, if you look at fintech companies today, right? If they are using stablecoins and they're using something like USDC, that net interest margin is still being captured by Circle. It's still being captured by Coinbase. I think going forward, what you're going to see is companies that are going to build distribution and then go look down the stack and say like, okay, should I run my own stablecoin under the hood and just show a customer USD balances? Should I partner with somebody like Agora or M0 and basically just do a rev share and still show my customer USD balances? Do I want to, incorporate my own blockchain here? Do I want to run my own wallet? And so Stripe is probably the best example here of who's dominating this at the infrastructure layer for payments. Stripe now has a blockchain. They have a stablecoin. They have a stablecoin issuance platform, wallets, cards, payment APIs.
And a gazillion people using it all the time.
Yeah.
Yeah. And so what they're going to do though is they're just going to completely commoditize that stack, right? They could make stablecoins, they pay you yield. They can make transactions nearly free. They could subsidize your monthly SaaS payments for wallets.
Right. So then where's the competitor opportunity there? Like this is what I'm really trying to understand.
So I think on the payment side, well, payments is a huge category, right? Stripe still does 1 trillion out of a total of global 190 trillion for global distribution. So there's still a lot of, I think you have to go target certain geographies that Stripe is maybe less competitive in. You have to go target certain businesses that Stripe is maybe not competitive, meaning probably non-developer related payments. But the value capture I think you're seeing there is that a lot of the infrastructure that we value in this multi-trillion-dollar asset class, big companies are coming in and commoditizing very quickly. So I think the same thing can be applied to yield. I think the same thing could be applied to flows around publicly traded assets as well, which is you may choose to commoditize certain layers, but maybe you really work on swaps between different currencies. So I still think FX could be a massive category, but maybe you run that on your own blockchain. Same thing with the wallet layer. Maybe the wallet layer gets continued to be commoditized. And I think if you follow basically just the acquisitions that have happened over the past year, you're starting to see that. Where these companies are doing like the Fireblock, Stripe, Circle, and they're going to start doing this.
The big question I have in my mind around there is just like the value of incumbency versus disruption. And it feels like we're really seeing most of that value likely to be captured by incumbents that have a distribution advantage already. So I think that's what is interesting to me as you commoditize the complements around this and sort of like owning that customer relationship, whether that's developers through integrations or that's the actual end user, becomes increasingly important. So the competitive set of like Coinbase, Robinhood, I don't know what's some other SoFi maybe,
they've been strengthened, which is why like if you're investing in these companies, if you're investing in a company that's going to compete with Coinbase or Robinhood, you better go do it in a market that is completely underserved. So the global south is still probably a good bet in that category. If you're building payments infrastructure, go somewhere that like nobody is competing on. Companies like Rain that are doing stablecoin card settlement, right? Like they own and operate their own network. Visa and MasterCard aren't there yet. They have to scramble. Those are good examples of where I think value can accrue. Same thing of just like building the connective tissue and plumbing. We don't have globally connected compliant rails for publicly traded assets on chain. What you're seeing today is like probably first mover, TBD what the SEC says. Same thing with yield. Like we've never had these rails being built. So if you can go lay the plumbing, I think the message is clear that you can capture value, but you might have to initially you might have to kind of shift that value capture to some other place in the stack.
I'm curious what your view is on, I guess, token models today and what's really going to kind of unlock the institutional opportunity or willingness to, or desire to buy tokens. There's narratives that network tokens are overvalued. We need to return to fundamentals, but they've never really been valued fundamentally. Buybacks and burns aren't really working as very well as kind of an economic alignment between projects that maybe aren't network tokens. Now we have kind of ownership coins and equity-backed tokens emerging. I'm curious just what your kind of perspective on all that is.
I don't know. I find it to be a little bit silly, right? Because like a lot of these things are valued on fundamentals. Like it's just maybe we're in a bear market, right? So something like Hyperliquid or Athena is being valued at like, 8 to 10 times earnings, depending on the day. Like in a bear market, that feels pretty healthy. and they'll bounce back. But at the same time, in a bull market, they could be valued at 3 times, 4 times, 5 times. Like, we'll go way over our skis very, very quickly. So that's just how it is as an industry. It's volatile, it's reflexive. But I think this reset is incredibly healthy. I've always long thought that, like, we're going to rotate back into the things that actually generate value and are not purely hype based, and frankly, like, aren't a commodity. If it's cheap, it doesn't capture any value, it's probably a commodity. And
But how do you look at something like a Solana or Ethereum, where
I certainly think there are certain chains that are going to be, very important, but do you value those things on cash flows, on security? I think that's the open question. Solana has obviously done incredibly well. Ethereum has too. Ethereum's had its challenges, which I think have been well documented, which are mainly the L2s building on top of them. I think the main thing that I look at today is, like, which one of these chains are really going to survive and thrive. Solana seems like it's in a good position. When you have, like, Tempo backed by Thrive and Green Oaks and Circle launching Arc, like, this is my point, is, like, all of the hard work and all the value that we've put into the underlying blockchain infrastructure is now being basically forked and, being applied to real businesses. And these venture funds are going to come in and just put their businesses on top of Tempo. And, like, that's great for as an industry. It's going to grow. A lot of other businesses are going to benefit from this. Again, stablecoin growth, DeFi, payments broadly. But, like, my worry is, like, you're now competing against, like, the Stripe mafia, and that's a really tough team to compete against.
Can you give me the bull case for stocks on chain?
Yeah, I mean, I think first and foremost, there's a huge underserved population globally, and now you can get a stock to them in the same way that you can get a stablecoin. It's cost efficient, it's quick. What you really need is guidance on what does the underlying custody model look like. We're investors in a company called Denari that does this. They actually hold the asset and street name. They're a broker dealer. They're a transfer agent. The stock that they hold is your stock. You get voting rights, dividends, etc. So I think in a world where you can stream that to somebody's phone, again, they could be anywhere in the global south. They're already holding stablecoins. It's inevitable to me that they're going to start moving into the rest of the U.S. financial system. And now, if you can enable that to have someone swap from, Solana to Tesla stock, that's super interesting. And then there's all these other really cool things you can do when you embed DeFi into this. So we've been toying with this idea of, like, yield bearing stocks, where maybe you hold your Tesla position, borrow against it on Aave, but then resupply, and now you've got a native yield while you just sit in an asset that you're really, really bullish on long term. So it's very clear to me that, like, there's an immediate convergence of DeFi and the traditional world, and you need those assets to be represented on chain. You just probably don't want them to be some synthetic IOU or offshore SPV. The ideal structure would be that they can actually really easily touch the US financial system, because they're going to have better liquidity. You're going to have real market makers on these things, and you're going to have real rights as a token holder.
Do we need to have some sort of regulatory shift to truly enable that? Because I think we are seeing these synthetic ones capture attention, because I think it is serving that very obvious market. And yet I think a lot of market participants are maybe not fully aware of some of, like, the fundamental limitations of the legal system and how stocks and equities are represented there, and the work maybe that needs to be done to overcome that.
Yeah, we need guidance. And I mean, if you look at Europe, like, they moved quicker with Mika. They already have some guidance, which has enabled things like also compliant ICOs. So I think you're going to see, the convergence of capital formation using kind of crypto rails. And so you mentioned, Josh, like, tokenize equity, like actual equity tokens. I think that's going to be very common too. So it's going to be bottoms up and tops down. But yeah, we need guidance from the SEC. I think once we get there, I'm very confident you're going to see the bottoms up approach, which is, like, companies are going to go raise money online. We're investors in a company called Legion, and you're seeing the demand for these things. It's insane. Coinbase just bought Echo. So, again, it's only a matter of time, but the current crowdfunding regulations do not work. The accredited investor rule is incredibly outdated.
Preach.
And so, yeah, you need structure on all those parts. I'm confident, though. I feel like we're going to get it done.
We're just not seeing a lot of that in any of the existing legislation. So it feels like it's a thing that's a little further out. I mean, the main thing people can point to is a safe harbor provision in here that is still pretty narrowly defined, or more narrowly defined than I think most people on the timeline are recognizing.
Yeah, I don't think clarity is going to get it done on things like the non-accredited investor rule, but I'm hoping that this, I don't know what it's going to look like, but this idea of an innovation exemption would allow companies to be able to have some access to, these internet capital markets with some restrictions in a sandbox where they can play around and not get penalized.
This is the number one. To me, this is the reason I'm in crypto. And I think most people are, frankly. There was a whole world that we were locked out of for whatever reason, maybe not being rich enough, not being connected enough, and then all of a sudden ICOs happen, and you go, oh wow, I get to be early to this, non-consensus to this, benefit from that. And I think every cycle, the reason people are coming in is some version of that.
Totally.
And so I think it's this idea that we can all be participants in and impacted by disruption, but we're not able to invest at early stages in that disruption, I think is just obscene, quite frankly.
It's silly. Yeah, and the SEC has said, they want to enable everyone to get involved. What they want is proper disclosure. So you need some disclosure regime. And if you look at crowdfunding, Reg CF, Reg A+, that's all it is a set of disclosures, information on the company, management team. I totally echo your point. I got into crypto in 2018. I was working at a company called Seed Invest. That was the first crypto-enabled broker-dealer. We had an ATS license. And we wanted to do compliant ICOs, and Circle acquired us. And so I've been trying to do this for like 6 years. And now I finally feel like we have the regulatory setup, but we're still missing that last piece, which is like, how do you do this? What disclosures do you want from us? And I think if you look around crypto, most of these founders, like the majority, want to be compliant. They're like, just tell us what to do. So unfortunately, we had the wrong SEC in place before this. Now we have a much better setup, but they've only been here, they haven't had that much time. So I think we have to give them time, and I think we'll start to see stuff in Q1.
I hear you hate creator coins, and I would love to.
Let me set this one up better, because I think it's funny. This is in response to a video that Jesse posted about why am I launching a creator coin, and Wyatt's response here is launching a creator coin tied specifically to cash flows via an income sharing agreement is clearly a better, safer structure than launching a meme coin tied to, quote, attention. But having an ISA would make it a security, so instead the reg arb is to launch a shitcoin. Hopefully someone will do the hard work and build the right product soon. What you on about there?
Okay, so if you have to derive any kind of value from selling, for example, like as a creator, right? Like I can coin all this content and sell it. I don't think, like the rationale that I hear often online is like, oh, creators can't easily enable micropayments, the platforms take all the value. Like that's actually not really true. And like crypto should make it better, right? You should be able to host something online, maybe, even via Twitter. I think platforms like Twitter will enable this. And maybe it shows you 11 a.m. and I can click $1 to go watch the stream, right? And I pay for it, and that goes directly to your wallet. Or maybe you're like, hey, we're going to launch an 11 a.m. token. We monetize by ads, by micropayments, and you can get some portion of that, right? You're buying into something. It just feels better to me than like you guys coining this clip and then putting it on base, and then like, really to get all the value, because maybe it's worth $1 million. Like you have to go sell and nuke the coin. But I'm happy to hear any arguments against.
Well, I mean, I guess my pushback here, I just always find it interesting to see folks who are very aligned with the overall crypto ethos, which I think is open markets and this pursuit of figuring out what makes a token valuable or what might be valued by tokens, to have such a narrow view of how that value is created. And I think, whether or not these things ultimately end up being valuable, the value to our industry through the type of experimentation that's happened here clearly seems beneficial, right? Like the entire reason why we're in this conversation today talking about tokenized equities and ACTs and stuff like that has been because of people pushing the edges into launching new types of assets that, all the way, let's go back to Bitcoin, right? And let's talk about L1s, and we can talk about NFTs and I think it's very fair to have criticisms of how they've rolled out and the limitations, and we should really be, I think, very honest about the results of these things. But I think I just have this general permissive approach here to say, like, I don't know what new markets can be valued by tokens. Attention seems like a very interesting one to go do. And so it's not clear to me that there isn't value in attention, or that people won't want to speculate on that in some way. And so then I think the question in my mind is really like, what is the right model to do that with? And I think there is a lot more nuance to the Zora and Base token model here than I think you represented in your critique there, with the sort of nested markets and where ultimately value flows from here. So to me, it's not obvious that an ISA is actually a more compelling token to hold. In fact, I think it's less compelling to me. Though I would love to see people go run at it, and maybe that's...
Well, you could have it tied to attention, and those attentions could feed from ads. Like I hear you. I'm not trying to be too restrictive here. I just think we've seen a lot of these same models applied to things like NFTs before, and we've seen how that's played out in the market. And generally, people are coming to speculate. And I think when you just have pure speculation, you see the likes, I'm sure everyone's been talking about all these snipers, and right, like there are market manipulators that can come in and take advantage of it. That's why it kind of feels a little wrong to me. It's not the premise of it. Like, tokens should represent many things, and we are for sure entering the age of tokenization. I guess as an investor, I'm trying to think of like, what is the best value capture? And sometimes, this is maybe what I was trying to allude to, sometimes it's like doing the hard work of taking something that already exists and making it programmatic, right? Taking something that was previously paper-based, making it purely digital, such that a creator can go online and monetize. And like, that's the type of infrastructure that I'm like,
I'm here for all of that. I think it was interesting seeing some of the responses to this. Like, I think somebody quote tweeted it saying that, Jesse should just go issue a security token, call it a security token, call it a security, go issue it, which to my response was like, wild thing to go suggest somebody else go do, to sort of break securities laws in some ways.
This is what I would love to see in some sort of like innovation sandbox of like, what can this type, because I think the whole point here is like, hey, we have existing laws, we have existing systems. We want to borrow some of that, but we want to remix it with some of this over here and make it purely digital.
Yeah, and I guess my point is like to get that to a place where I think is actually interesting, we need to push those edges a lot further.
Totally. You probably shouldn't just call it a security. Maybe it's something else. I don't know.
Clearly, it lives in some liminal space between those two, like is
I think the thing that leaves me optimistic is it feels like this kind of market native social media is a potential new category and type of social product. The market's the algorithm. You can buy posts or speculate on their attention if you want, and that value flow into the creator coin. It feels more of a closed loop if that actually works than it just being a creator meme coin, which I fully agree is.
Yeah, that's kind of my point. It's like maybe we will have, like, meme coins aren't going anywhere. And again, these are open markets. Anyone can do whatever they want. But what would it look like if Mr. Beast dropped a token? Like, is the way that Jesse did it the best form factor for someone like him with a massive audience that people might want to buy into? I don't know.
Yeah, I think it's really interesting to think about Mr. Beast and his venture structure and all these sort of businesses he's built around that, and thinking about what would the tokenized version of that be. And I think could be incredibly compelling, and a sense of ownership over that is, I think, absolutely essential there.
And if you were early, right? If you were one of his first 10,000 subscribers, like, what could that look like for you? Because I think part of this is like being a fan, being a supporter, but then tying that to ownership. And that's what, like, I think we're in search for as an industry, which is why, I'll be critical of some of these things, but I'm certainly open to innovation here. And I think we all want to see something work, because it's clearly like, this is the path that we're heading down. But I also would love to see more things around micropayments. Like, I'd love to see and that's the problem, right? You guys are streaming through these different types of apps. The apps are currently the gatekeepers, but it's really hard to bootstrap a new app, as we've seen.
Yeah. I guess, is now the time micropayments actually finally become a thing? None of those things are all that compelling to me, quite frankly. And I think like we have an 11 a.m. token on Zora, came out really early. It's gone up, it's come down. It's not the reason for doing this, but it becomes the sort of proxy that people can participate in. And, we do different things to kind of tie together. It feels less compelling than directing some advertising to a buy and burn and or gating it in some way with micropayments. But obviously there are to say micropayments aren't working, I think OnlyFans is basically a micropayments platform. It does an insane amount of money. So
I think it depends on the content, right? Like,
we start taking our clothes off, Josh, we can people pay. We just start taking off one piece of clothes, and people just need to start donating so that we actually keep the clothes on. I feel like that might be an effective.
I think you're onto something.
I think we're going to need some different hosts for that to work. But
I'll invest in that token.
Yes. All right. Okay.
Yeah, I do think it is interesting to think about what these sort of traditional asset structures can unlock if we have like the confidence to be able to say exactly what they are and structure them in a strong way, and get to do it on chain. The ability to have capital to go and do things still remains really gated, right? Like even if you just look at sort of like the venture funding thing, I tweeted over the weekend that I was questioning how much of a barrier actually exists for exceptional founders to go get funded today, and got a lot of pushback on that, which is it's fair. I live in a place where maybe it's not very hard to get that, but we're not even thinking about that. I'm not even including all these other asset types, like ISAs, or what maybe the original social tokens were trying to go do in the way that Alex did it, where, hey, I'm trying to get money to go do a thing. Once I can go do a thing, my opportunities expand, and speculating on that becomes potentially interesting. So it's very easy for us, I think, to get narrowed off in our thinking, especially as it feels like crypto's kind of consolidating around a couple business models that actually really make sense. But I think if you sort of step on the other side of acknowledging that there's a couple business models that make sense, there is actually a huge world out there in which you can sort of apply it.
I agree. I also think that part of our problem here is due to a lack of regulation.
I mean, it's
right.
It's
If you
absurd.
just said like this whole setting up foundations and labs structures, and as investors, we buy equity and we buy tokens, and you can't say certain things because if you do, you're going to go to jail because it's a security. The problem is that it's too restrictive already. And so what I would love to see is, and through maybe potential exemptions, through people actually coming out and explaining how these things work, like actual ownership. Because I'm sure if you didn't have any restrictions, you could probably say things today that you would love to say to your token holders that you can't say, or do things that you can't do. So you asked about the buyback and burn model. I think it works for some tokens really, really well. I think others maybe not so much. And could they, or do they want to do something different? I'm sure they would. It may be in the creator world.
Well,
it
you
doesn't
even see
matter
this
so much.
on like Pump, right? Pump is not out here saying we are guaranteeing that we are going to use X% of our revenue to buy back tokens, right? There's still this like hazy middle ground of which, they're just demonstrating their desire to go do it, and legally specifically they're not committing to that. And there's obviously a discount that needs to get applied to the valuation model if that's what you're basing it on. So
well, even what happened with like Vector and Tensor, right? It's like if you kind of have to just trust, you're kind of entering into this social contract because the team can't say what they want to say. So you're kind of guessing. It's like, do you actually believe in this token, and are you going to make sure to take care of token holders long term? And people that did believe that ultimately got screwed when the tech and team got
And they shouldn't have.
got
They
acquired.
should have been acquired, and that money should have flown right to the token holders.
Exactly.
Right?
Yeah.
Yeah, the whole thing. I mean, yeah, that's tough. All right. Well, okay. We're coming towards the end of the year here. Markets are, I don't know, are they down today, they up today, whatever. We're in a bit of a lull and or bear market and or pre-bull market. We'll see. Would love for your takes on sort of the first half of next year. Like, are we going to be higher? Are we going to be lower? Are there some things that you're just excited about as far as inflection points? Or are we just holding on for dear life?
I have an 8-year fund. We can extend it to 10. Been around, doing this for over a year now. Like, from my vantage point, I've never been more bullish. My partner Juan and I have been investing kind of back to Circle Times starting in 2021 together. Like the talent pool, the regulatory setup. So I don't know what it is. I think this is just like a healthy transition that we're going through, where people are starting to take a harder look at things, right, and say like, what do we really value? What do we not? What needs to be improved? And so, sometimes that comes with a little bit of an ass kicking, but I'm pretty confident that, we have an insane setup here for crypto broadly. So like, I really do think that the best opportunities you have today are like working crypto or working AI.
Mm-hmm.
And the waves.
Yeah, the solution is always just zoom out.
Yeah, zoom out. Like,
yeah,
this has been an incredible run for crypto just because the price has come back down for some short period of time. I mean, people say this all the time, like, I'm thinking about Bitcoin 5-10 years out. Well, then don't check your portfolio, right? Because it always surprises you, and you always look back. I think I bought Bitcoin at like $2,000 or something like that, and I'm like, what was I doing? I could have, I should have bought a lot more, but you just watch the price fly up and down. So I do that as an investor too. Like, I'm super excited about the companies that we've invested in. Really excited about the market. It has not slowed down on our side whatsoever. We're leading 2 rounds right now. And so, companies are taking longer to go to market. They're being smarter and healthier about like how do they launch a token. And I think to your point, like we're going to have this regulatory setup where we're going to have clarity. The regulators seem wide open to feedback and to changing things. And so I think we're going to have a pretty iterative process over the next couple of years on the regulatory side. And that should lead to just better tokens, better ownership, better economics.
Yeah, if I go back 4 or 5 years ago when we started Seed Club and sort of think about the wish list that we have had, or I mean, I think we had expected that something like this would happen. I think and regulations become more, but we're sort of here going like, oh shit, right? This is what we wanted, right?
Yeah,
so
yeah.
There's a bit of a digestion of that reality, I think, right now, and it's been interesting both to see in my thinking as you as a founder, you always have to be updating your priors to understand like what is. Because it's this triangulation between what you can say, what token models are working, what's demanded in the market. So there's this constant updating of priors. And I think to land here where you're like, oh, right, those things that we really wanted to go do, we think we can actually go do right now. How do we reorient around that? And I think that's really what this year has been, or at least the last 8 months has been. And if I look across our portfolio and even just our thinking, I think all of our founders have recognized sort of the shift on the ground and are aggressively running at the model for their token that they really wanted to, the business model that they really wanted to. And we are still in this gray area where we don't have absolute clarity yet. So let's see what that actually unlocks.
I think that presents opportunity. And, if you think about it, like you mentioned this, I think every good idea that we've ever had in crypto is being chased at full speed right now. So
Web
the
bands,
outcome
baby,
is like,
let's go.
People are going to, founders are going to win big. So the token markets kind of suck the energy out of that a little bit, but I think there's like a whole host of awesome companies that have yet to launch tokens that will do so in the next 2 years.
Very much agree. Wyatt, appreciate you hopping on with us here at 11 a.m. The podcast studio looks great. I love that you're in a crew neck instead of a suit, though. It would have played into the framing that we have below on the Chiron a little bit better. Yeah, I mean, I feel like would love to check back in with you in a couple months. I think the intersection of TradFi and crypto is the place that everybody needs to be playing in now, or at least aware of. I'm not a believer that it's just going to be TradFi coming into crypto that is the big opportunity. I think we'll see some breakout, incredible token models that kind of break the mold there a little bit. But the competition set is no longer the other DEX or L1 or L2 product. It is the entire internet, and I think all investors and founders are updating their mental models to include that today. And it's just going to be a fascinating time here as we jump into the early majority.
It's time to get more ambitious.
Yeah.
Oh, yeah. Hell yeah.
Couldn't agree more. And happy to come on anytime, guys. Really appreciate it.
Awesome. Thank you, sir.
Peace, dude.
Thanks.